Okay, so moving on to the budget presentation, Miss Bomben.
Thank you, Mr. Mayor. I would like to approach and give a presentation for the benefit of the public viewing from home and in the gallery.
Thank you.
Good evening, Mayor and Council. We are presenting the 2015 municipal budget for the City of Prince Rupert. For the benefit of the Council, the viewers in the gallery and at home, we have prepared a presentation to accompany the report to Council. The report itself is for information purposes, and it is requested that Council defer direction with respect to the 5-year financial plan and related tax rate bylaw until after public consultation. Staff plan to have 2 public consultation meetings during regular meetings of Council, the first on March 9th at the Leicester Centre, and the second here in Council Chambers on March 23rd. Our presentation order is as follows. We would like to take about 5 minutes to review some of our unique services and our revenue challenges. After, we will present the budget requirements and the impact to property taxpayers. We will put this into context compared to other taxes, and finally touch on the need for a financial policy going forward. As described in a recent report produced on the capacity of the ferry service, our airport is described as one of the most challenging to access in the industrialized world. We are also likely one of the few municipalities in BC that have to fund their own transportation to an airport. Most are accessible by road and light rail. Although many of our neighbors and visitors benefit from the proximity of our airport, they only pay on a user basis. Our municipality pays not only a user fee, but also subsidizes the operation through taxation. 2015 predicts a subsidization of $925,000. We have some great servicing partners. However, contributing towards their operations does require annual revenue generation. In 2014, the city advanced $680,000 after flowing through casino revenue sharing and locally collected hotel tax. Council recently granted 65% of the 2015 grant requests, with the balance to be considered during this budget process. Staff has prepared this budget with recommendations to grant amounts in line with those provided in 2014. Now on to our revenue challenges. In 2004, the province of British Columbia capped the major industrial mill rate for all municipalities with a qualifying port property. Therefore, the city can only charge prescribed mill rates on industry that is considered eligible. All of the city's major industrial operating activity qualifies for these capped rates. There are 2 mill rates that can be charged depending on when the property was built. For those in existence prior to 2004, the mill rate is capped at 27.5. The industrial operations that are affected are Ridley Grain, Ridley Coal, and Fairview Terminals. The second mill rate is set at 22.5 and is for all industries that came into existence after 2004. This includes Pinnacle Resources and new operations for Ridley Terminals. The city's 2014 major industrial rate is 47.75. This is a 20 to 25 point difference. Additional challenges are with regards to a regulation in the community charter that exempts certain berthing infrastructure at port facilities. In the case of MAR terminals, approximately half of their non-land valuation is subject to exemption. This translates into $15 million worth of exemption, or at the capped rate, $412,000 in taxation that is exempted. Part of the reason for the disparity in funding is the fact that everyone else's assessments have gone up, yet industry valuations, in the absence of investment, depreciate. They go down yearly. The only way to keep the industrial tax base flat is to have new investment every year. Here is an example. This is the taxation received from the container facility. The company has paid the full value that is levied yearly. Since the valuation of industrial property depreciates over time, a capped rate on a declining value results in steady diminishing revenue. In 2011, the city received $712,000 in taxes. In 2015, we will receive $585,000. That's a reduction of $127,000 in the span of 5 years. What this graph shows is the impact of provincial interference in a council's ability to determine appropriate rates of taxation on just one industrial property that qualifies for the cap. This graph shows the full extent that provincial interference has caused. It depicts all of the major industry properties at the full 2014 mill rate and the proposed full 2015 mill rate. The total amounts that could be levied are the total pie. In 2014, of the 5.1 million that would have made up the tax intake from industry at full rates, less the competitiveness grant the province gives us every year, the allocation of burden to the remaining taxpayers was $682,000. The 5 major industry ratepayers paid a total of $2.85 million. It is projected in 2015 that the pie will be $5.5 million at the anticipated major industry class mill rate. Of this, the 5 major industry ratepayers will pay $2.9 million, $50,000 more than last year. The remaining taxpayers will contribute $971,000 as their share of the burden, $288,000 more than last year. The last chart showed an amount provided by the province. It is called the Competitiveness Grant. This grant has been virtually unchanged since inception in 2004 and was initially provided to mitigate the impact that year when the cap was introduced. You will note that this year it has increased $15,000. Last year it didn't change between 2013 and 2014. This grant only compensates for properties built prior to 2004. There is no compensation for new properties. This graph shows the impact to the City of Prince Rupert, other rate-paying classes from 2004, when the tax caps were introduced, through to 2014. You can see on the yellow line where new investment offers a spike of new taxation from major industry, but declines afterwards as assessed values decline. And I will just show that with the highlighter here. So here is the yellow line. This is major industry. The red line is the residential tax revenue, and the green line is the business tax revenue. Residential and business. The residential burden has increased from $4.7 million to $6.6 million in 10 years. The business burden has increased from $3.2 million to $4.3 million. Major industrial tax revenue has declined from $4.5 million to $2.8 million. There are 2 new industries and an expansion of the coal terminal in this time frame. Ultimately, the end result of the tax caps is this. Industrial contribution to the municipal tax base diminishes because there is a cap on declining assessment. This results in more profit and ultimately higher corporate taxes for the provincial and federal government. The result to the rest of the tax classes is that they take up the share of the burden. This translates into higher mill rates for residential, business, and the light industrial class. This makes it less affordable to open a small to mid-sized business venture. Ultimately, the effects to Prince Rupert is that this provincial international competitiveness scheme stifles the competitiveness of entrepreneurs wishing to locate in Prince Rupert. This means less choice locally, less jobs, and more out-of-town and online shopping. Now that we've provided a lay of the land with respect to taxes, we will present the budget. Included in the operations budget is $310,000 in capital improvements. The balance of $6.2 million in capital fund is funded through dividends from Legacy Inc., the city's wholly owned subsidiary company, a short-term lease, grants, reserves, and surplus. These capital projects were approved by resolution by Council in December 2014. Funding of this nature is not sustainable, as will be discussed later in the presentation. Our community is potentially on the brink of a boom. Based on the experiences of other resource rush municipalities, we can expect both positive changes and negative impacts. We have not been idle in planning. During the past year, we have conducted a housing study to establish a baseline, and each department has found themselves inundated with inquiries regarding service capacity and proponent engagement. We never forget our mandate, however, recognize that to adequately engage in the planning for major projects process, we are at a serious capacity shortfall. In order to adequately prepare, management is recommending that Legacy Inc. provide the city with the necessary financial resources to plan for major projects and attract the resources and investment in the community necessary to help us come out of the rapid change for the better. This initiative is considered a finite project and is limited to 4 years for budget purposes. It includes obtaining the expertise necessary to participate fully in the environmental assessment process, represent our interests in the Resource Benefit Alliance, advocate for provincial and federal participation in preparing for community for the changes, and obtain the temporary resources necessary to help in the planning process. Should major projects fade into nothingness, the community would be no worse off. If it comes, we will be in a position to receive it and whatever it throws at us. Our budget expects a shortfall of $220,000. This is made up of wage increases due to collective agreements and predicted energy increases. To balance the budget will require a mill rate increase of 1.9%. Here is the allocation of tax revenue to services budgeted for 2015. The largest are RCMP at 25%, fire at 16%, and recreation at 13%, followed by roads at 10% and grants at 7%. These 5 services make up 71% of services funded through taxation. To calculate the impact to a property owner of the recommended mill rate increase, one needs to compare the 2014 general levy to the amount calculated this year. The 2014 general levy can be found on the 2014 property tax notice as shown here.
So what are those other
things? The other levies that are on our property tax notice are collections for school, for the Northwest Regional Hospital. This is the school. This is the Northwest Regional Hospital. This is the Skeena Queen Charlotte Regional District. This is the British Columbia Assessment Authority, and this is the Municipal Finance Authority. The city, all municipalities collect on behalf of the regional districts, the province for school, and the Municipal Finance Authority and the Assessment Authority, and also regional hospital as well. The only portion that comes to the city is the general.
So, and do we have anything to do with setting those rates?
We do not have anything to do with setting any of those rates. Only the general rate is the only one that council sets.
Going back to that last slide just for a sec, the general rate that we set last year was 8.42.
Yes, it was, the general mill rate was 8.42627.
And who sets the other ones?
The province sets the school one. The Northwest Regional Hospital and the Skeena Queen Charlotte Regional Hospital are set by the regional district, I believe. And the BCAA, which is the Assessment Authority, and the Municipal Finance Authority set their own rates as well. The formula to calculate the general levy is on this slide. Take the 2015's assessed value divided by 1,000 times the appropriate mill rate. This is the municipal levy for 2015. Compare this to the 2014 general levy, which would be, again, on the previous slide. We have provided all of the proposed mill rates on the next slide for viewers to calculate the potential impact to them. These are the proposed municipal rates for 2015. Residential, 7.37660. Major industrial, 50.13506. Light industrial, 30.49740. Business, 25.77710. And finally, nonprofit or recreation at 4.81391. I have not mentioned the utility or the major industrial rates that are capped. There is no change to those.
So according to that, the cap for the port's 22.5, but our local businesses are paying 3.22 more than the cap for the actual port businesses?
For the industrial properties that qualify for the tax cap that were built prior to 2004, they paid 27.5. That is correct.
I'm looking at after 2004, the major industry capped at 22.5, which is say Pinnacle Plant, and any others that are built after that are paying 22.5, but our local businesses are paying 3 times that.
They're paying 3.27 points higher. That is correct. We have provided the effect to a homeowner with an average assessed value in both 2014 and 2015. Note, this is before the homeowner grant is claimed. In 2014, the average assessed value was $196,000. Using the 2014 mill rate resulted in municipal tax of $1,652. In 2015, the average assessed value is $229,000. Using the proposed 2015 mill rate will result in municipal tax of $1,689. The difference is an increase of $37 for 2015, or 10 cents extra per day. This slide compares the projected daily cost of the average homeowner in 2015 after the application of the homeowner grant. For example, every day a homeowner or family of will pay $2.52 per day to access all municipal services, except the water, sewer, and garbage utilities. This translates into $1.31 for protective services, 33 cents for roads, 40 cents for recreation, 23 cents for grants, 15 cents for the airport access, and 10 cents for transit. 83% of homeowners' assessments in 2015 are valued at $300,000 or less. Therefore, at $300,000 assessed value, a homeowner can expect to pay $3.95 per day for municipal services. Compare this to the taxes paid yearly for a homeowner with an annual salary of $70,000. The taxes paid to the provincial and federal government combined are $13,600 per year, or $37.26 per day. For a family income of $70,000, the taxes would be a little less. However, the daily charge is still much higher than the municipal daily rate. This means the average homeowner making $70,000 salary pays 6.3% of total taxes to the city. We offer a lot of services daily to the city, compared to the services used by the average homeowner daily from the provincial and federal government. It is expected that changes are likely. BC Assessment will release the revised roll March 31st, which will take into account any appeals to assessed value. Any reductions to assessed values may impact the proposed mill rates. I will move on to financial policy. The city currently doesn't have a policy to retain accumulated surplus. Accumulated surplus consists of annual surpluses added up over the years. There are 4 reasons why a retention policy can be considered sound financial practice. It sets aside funds for anticipated future capital expenditures. It provides cash flow to fund operations until current year taxes are due. It maintains a fund for emergency expenditures, and it provides a reserve for an unforeseen drop in revenues or significant unanticipated changes during the year. Additionally, there is no policy in place to save for asset replacement. The federal and provincial government are now requiring not just a plan for asset management, but the actual funding of it. This helps a community qualify for grants because it shows funding of the city's portion of the 1/3 contribution and is a plan to save for replacement of that asset. Best practice is to fund depreciation of assets. We are not in a position to afford funding amortization just yet, but something is better than nothing, which is our current state. Many communities have now implemented a 2% mill rate increase annually to move into reserves. This amount is perpetual. It's a separate line item on their tax bill. A reserve policy such as this shows commitment by the community to save for asset replacement. Our community has a $288 million infrastructure deficit. It is with this understanding and the knowledge that to qualify for government grants, a policy needs to be put in place and in action that staff recommend Council consider enacting a reserve policy for a 2% mill rate increase perpetually. A constant percentage is predictable for taxpayers and will begin to replenish the reserves we are using now and continue to grow for the years we need to replace our infrastructure. The city could request local industry subject to the tax cap to contribute, and Legacy Inc. could be utilized to augment the reserve funds through dividends to the city. The establishment of reserves also minimizes the amounts of loans we will need in the future to fund replacements. This idea is introduced solely for engagement with the community during the year. Alternate considerations are welcome. Finally, our report includes a notification to Council and the community that we have received our final letter indicating the RCMP building facility for the policing operation is inadequate. We were aware this letter would come one day, and in fact, the city began the process of consultation with the community in 2012. The process stalled, but now we are in a position where we either take the next steps and have some control over what is built, or the RCMP will build it for us and send the city the bill. Staff intend to engage the community with respect to this notification and begin necessary planning. This particular situation highlights the need for a policy regarding asset reserves. Had a policy been in place, our reserves would be large enough to mitigate the need for a loan and would have had all community members contribute to the fund while the existing RCMP building was and is in operation. Thank you, Mayor and Council, and to the community for listening. We look forward to the consultation process to be held on March 9th and March 23rd.
Okay.
One question that you didn't show a comparison of is the mill rate for last year and this year has actually dropped, even though because of the assessments, taxes will go up a little bit. Is that correct?
The way that it works is that we are required to take the assessed values in 2015 and calculate what the rate would be to generate the exact same amount of revenue that we received in 2014. This is called the adjusted mill rate. Afterwards, we recommend an increase to the mill rate to come up with the shortfall to our budget.
Other questions? Councillor Thorkelson?
So our budget is going to be increased by how much over from last year?
220,000 is the shortfall.
And staff is recommending that we raise that money by increasing the mill rate, which will increase people's taxes by the $37 a year. Is that what you had up there for the average house?
Yes, for the average house, it would be $37 a year.
Thank you very much.
Other questions? Councillor Cunningham?
The mill rate that I saw up there was less than the mill rate last year. Is that correct?
Yes, the mill rate this year is 7.23906. That is the revised mill rate, but once you add in the increase, the residential mill rate would be 7.3766.
But it's still lower than last year.
Last year's mill rate in 2014 was 8.42627, with having to adjust the mill rate and then adding in the increase that we're proposing will result in 7.37660. So yes, it is about one whole mill rate point less.
Okay, thank you very much.
Just one last thing. Sorry, Ms. Bomben, would you be able to repeat when the 2 public information sessions are going to be?
I'd be happy to. March 9th will be at the Leicester Centre, and March 23rd will be here in Council Chambers.
Both at 7 o'clock?
Yes, both will be at 7 p.m.
Okay, thank you very much, Ms. Bomben. So a recommendation that Council receive this report for information purposes and delay any direction to staff until after public consultation scheduled for the next 2 Council meetings. Moved by Councillor Cunningham, second by Councillor Kinney. Any discussion? Councillor Moe?
Just for my own clarification, Mr. Chair, I guess this question is for Bob. That recommendation to delay direction is just specifically to garner public feedback before any substantial changes.
Certainly. It's traditional for the staff to own the budget until such time as it's presented to council. This is our professional recommendation to you. It's now up to council to gather public input and really make the value judgment on what should happen once you've received the public input. So I think that we've done our job now, and it's up to council now to hear the input, and then ultimately the bylaws will come forward, and council can determine whatever. The budget is now yours. It's over to council now to make these decisions.
Any further discussion? Okay, we got a question. Okay, all those in favor? Any opposed? Motion carried.